Good day, Junior Techies. We're going to look now at November 2019, Paper 2, Question 4. This question is allocated 16 marks and you've got 12 minutes to complete it. Again, make sure you stick with time allocated per question. The topics is VAT and tangible assets. A reminder, tangible assets forms part of Paper 1 and Paper 2. Question 4.1 VAT. You are provided with the information relating to little supply stores. The owner is a registered VAT vendor and VAT on taxable items is charged at 15%. The totals or figures for July 2019 are provided below. Before we continue with the question, please remember that when you registered as a VAT vendor, your annual turnover must be more than 1 million. Then it's compulsory to register. If your annual turnover is less than 1 million, then you can volunteer to register. But it must be less than 1 million and more than 50,000. Required, calculate the missing amounts indicated by A, B, C, and D. Complete the VAT input and output columns using the VAT amounts calculated and provided from the information. Calculate the amount payable or receivable from SARS. Take note now on your answer booklet. They've combined 4.1.1 and 4.1.2, where you need to solve A to D, and you also need to complete VAT input and VAT output. You need to understand the difference between output VAT and input VAT. Output VAT, we collect VAT on behalf of SARS. That money is owed to SARS, so this is why output VAT is regarded as a liability. VAT input is on all purchases paid. We are entitled to claim that VAT, so that money is then owed to us by SARS. This is why this is regarded as an asset. The difference between the two is our responsibility to pay over to SARS on a bi-monthly, every second month basis. This is all because we are registered as a VAT vendor. It is very important that you also understand your VAT calculations. When we look at the amount excluding VAT, it's always equal to 100%. 15% is added, the VAT amount, so the amount including VAT will always be at 115%. When we buy from our suppliers, we will add what it cost us, the markup, excluding VAT. So the markup will be added to how much did it cost us, excluding VAT. Starting now with the first one, cash and credit sales invoices. To find the amount including VAT, because they provided us with excluding VAT and the VAT amount, we can simply add those two together. Alternatively, you should know that if the amount excluding VAT is given and we want to find out what is the amount including VAT, we would say times 115 divided by 100, and you will get the same amount. If they, for example, provide you with the VAT amount and you need to find including VAT, you would take the VAT amount, 75,000, and then we will say times 115 divided by 15. Now, output VAT would be credited. It wasn't necessary to show it. It's already given to you. Output VAT, our liabilities will increase. That money that we collect from the cash and credit sales on the invoices is due to SARS. Purchases of trading stock. To find number B, you've got two options because they provided you with the amount including VAT and they provided you with the amount excluding VAT. If we take the amount including VAT, sorry, the amount excluding that, we're going to say times 15%. That means times 15 divided by 100. And that equals 37,500. This was on items purchased, so it means the VAT input account is going to be debited. And if it's debited, it's going to be plus 37,500. If you've used the amount including VAT and you want to find the VAT amount, we would take 287,500 times 15, because I want the VAT amount, divided by 115. It will provide you with exactly the same answer. Another option, because they provided the two figures, the difference between those two will equal the VAT amount. Debtors account written off. Remember, when invoice based, it means that we are responsible to pay over that money to SARS on every single invoice that was issued, irrelevant if we've received that money or not. So now what happens is, if a debtor doesn't pay you, we can decide in a business we're going to write it off as bad debts. But now it leaves us with a problem. What do we do with that VAT which was paid over to SARS? Because when goods are sold, output VAT is credited. This means that we are entitled now to claim that VAT, to get actually a reduction on the VAT which was payable to SARS. So when there's debtors account written off, it means that VAT output will be debited. So VAT output, make sure that you show minus 1,850. We owe less money over to SARS because of the debtors account which is written off. Stock returned to suppliers. And I'm going to go back now to my VAT input. When we purchase items, input VAT is debited. We are claiming that VAT. That money is owed to us. But now when we return that to our suppliers, it means that we now need to adjust our VAT input because of returns to our suppliers. So my VAT input will be credited, which means VAT input, I'm going to show minus 960. Office computer bought on credit means that we are entitled to claim that VAT. All VAT paid will go to input VAT, but now we need to calculate the VAT amount. They provided us with the amount excluding VAT, so we're going to say 9,800 times 15%. 1,470 can be claimed from SARS. Therefore, plus 1,470. Discount allowed to debtors. Discount allowed to debtors means that they've paid less because they settled their account earlier. This means that less money is actually owed to SARS because we're collecting less money. So if there's discount allowed to debtors, we will need to adjust that output. That output is debited with, now they provided me with the amount including that. In my table, I'm going to indicate the VAT amount is 705 and that output is debited, therefore minus 705. If we now want to find out how much do we owe SARS, it says specifically, or does SARS owe us? It says specifically, balance due to SARS on the 1st of July 2019 amounted to 6,700. This means that the VAT control account is regarded then as a liability because there's a balance 6,700. Our total output VAT was 72,465. Remember that output VAT is closed off to the VAT control account. Our input VAT was equal to 38,010. Input VAT is closed off to the VAT control account. So if we balance this account, it's clear that the credit side is more than the debit side. This means a credit balance, we owe SARS 41,155. When you're calculating the amount payable or receivable to SARS, you can draw a T account if you would like to, or you can simply say the balance in the beginning, 6,700 plus output VAT minus input VAT equals the amount payable to SARS, 41,155. Question 4.2, Tangible Assets, Internal Control. Lebo Mukena has recently been appointed as an assistant accountant. His job is to exercise control over tangible assets. When he verified the assets, he noticed that the printer and the laptop of the business were missing. His investigation pointed him to the accountant who took the assets home to give to his child to complete a grade 11 accounting project. Required? Explain 2 measures that you will put in place to prevent employees from using business assets for personal gain. So the first thing is random checks on business assets against fixed asset registers. Remember that a fixed asset register is an individual record of all of your assets. Signing for laptops when taking for use. So these are measures that we can put in place to prevent employees from using business assets for personal reasons. We are now done with paper 2. A reminder with content to study for paper 2. Make sure that you study your reconciliation. It consists out of bank reconciliation, creditors reconciliation, and debtors reconciliation. VAT, manufacturing, budgets. Budgets consist out of cash budget and the projected income statement. Inventories and fixed assets. Remember that financial indicators, as seen with one of the questions that we completed, question number 3, is incorporated into paper 2. Make sure that you study your financial indicators. Thank you very much. I wish you all the best for the exams. Have a wonderful day.